we have arrived at the last section of the canvas. That, of course, it's a bit strange to think that it's the last one, but it's really important because we've reached a point where we've defined pretty much everything, but we're still not sure about our financial viability. So if we look at costs, they are just the last element that we have to consider, because now we are sure of our value proposition, we are sure of how we will make money, we are sure of the infrastructure, and we are sure of the customers, but we have to understand what could be costs that are useful to put in order to understand if we actually have the opportunity to start with a company or if we have to review something. In this part, we must therefore talk about what the main cost items are, understand if from the point of view of human capital we need very specific resources, if we also need production activities, so perhaps buildings, machinery. But in any case, it is very useful to understand what the financial balance is within the company before leaving, because putting zero costs is impossible. We always consider that we must have something within this small section. One of the questions you can ask yourself is whether your business is cost-driven, for example, in the case of Ryanair, or if it is a company that is very focused on cost optimization. It is essential to understand what these items are, because in the part of defining the business model, we clearly have to be very, very focused on what they are, and therefore always try to optimize this part. However, these are activities that we have to follow if we have parts of revenue that are directly related to costs. If we work within a different sector, for example, if we are part of a luxury brand, the cost part is less important because the cost is linked to the value we give. So we have much more important multipliers. We can afford to spend what we can spend on costs, but because the revenues are so high that I am interested, but less than in the first case. Consider also at the level of the company's positioning, how much you are focused on the value part and how much on the cost part. And because this defines many of the activities and, above all, the attention we must put into them. We are talking about fixed costs, which are those costs that will always be there, even if you sell zero, there will be. Such as if we have the rent of an office for a year, clearly, even if we don't sell anything, there will be. If we buy machinery, it is difficult for us to sell it directly, or bills or salaries. So it's clear that we can make changes, but fixed costs are those that are not dependent on what happens within that month. Consider them because they are very important to understand if you have enough margin on turnover. On the variable cost side, this, on the other hand, could be connected with marketing communication activities, with production activities. So see how these change depending on the individual turnover. Within the business plan, there are costs that have percentages. For example, I say that production costs are 30% of sales. Clearly, if I sell 10 or if 150, they will change. Consider which ones related to a result on the revenue side. Because the fixed ones always remain the same, the variable ones can change, and even a lot, but they must certainly be reported. One of the questions you can also ask yourself is whether you have economies of scale. This is the case of supermarkets. For example, Esselunga buys very large quantities. So from this point of view, it can have discounts. Consider that when you do brand production, clearly, the more you do with the product, the less you will pay. So be very careful, because at the beginning, the margin creation part is difficult because maybe you have very small batches, you don't have enough financial resources, and therefore you have results that are not very interesting. However, consider that this is one of the aspects that you must also evaluate in collaboration with the resources you have, with the activities, and with the partners to understand if you can develop it at some point, perhaps even after 2 or 3 years. Another element is that of economies of scope. For example, the case of Procter & Gamble is definitely emblematic because they have many brands that do similar things. From this point of view, maybe they have people who work on different brands and who can afford to have communication activities, for example, all together. So from this point of view, it is clear that if they talk to people who do the communication for a single brand, maybe they can reuse part of this communication, and therefore there is not an economy of scale but of scope, because they can reuse the same content in different ways. So it's not about creating or buying more, as in the case of Esselunga, but it's about being able to optimize your resources, and that's something you have to consider even within a partnership. So as a recap, you can really put what you prefer on costs, because there are a lot of variable costs, there are a lot of fixed costs. You have to try to understand how your business is made of, and also explain if in the near future there will be possibility of economies of scale or economies of scope. So you can put a list, but as we said, in the case of revenues, you have to put what are the most important elements. So you don't have to put for each one individually what the amount is, because the canvas is an element of discussion. So try to be clear, but not to put too many costs or too specific, because they are not really that useful for a person who is perhaps seeing the canvas for the first time. We have to understand how our business is made. As always, but in the case of costs, we have to put what are the most important costs for us, try to understand how we can improve, then see if there are opportunities for us, because in the near future, as we said, maybe we could make economies of scale, maybe in terms of fixed costs. We have realized that there are too many in terms of variable costs. We have KPIs, key performance indicators, that can help us improve. However, the cost element also explains the coherence of the business model canvas.